All right, good morning, good morning. Today is Jobs Day, so that's going to be the number one thing on the books. We have to get through that before we get anything else done. I did post a picture of 5 things you need to know that comes from Bloomberg. So in our chat room, you can see there's the jobless claims, existing home sales, leading index, the European Central Bank April meeting minutes. There's going to be at least one Fed speaker today. And as you can see on Finance Juice, which is a good place to get like a summary of things. If we scroll back and look, we can actually see a summary of the Asian markets, what happened over there overnight. And usually there is a summary for uh, Europe as well. It's not in here yet, probably got a little bit ahead of it. So like we do every morning, we want to take a look around, want to identify if there was any news in the overnight that could carry over into today. And this starts in Asia, and then we go to Europe, then we come into the US looking for any kind of news. Most of the time, there's not going to be something, right? We're not trying to invent something. We're just looking to see if there's anything really big going on. The example that I usually give to teach this is think about that ship that was stuck in the canal. That was a really big deal. It was on the news everywhere. You didn't have to look that hard for it, right? So in the morning when you're looking around, if it's something really big, you won't miss it. It'll be everywhere. But you need to look around, right? That's the whole idea. So take a look at global markets, make sure there's nothing going on and that they're not going to have some kind of meeting or event. Then we bring it over to Thinkorswim, bring up the calendar, look at what's on the agenda for today. If your calendar is full and looks like this, and you're trying to see where the economic events are for the day, just undo everything and then come back in and choose Econo Day event. I like to put the description next to the time so I can see things really clearly. And if you notice today, we have a full house, right? We have a lot of things going on all day long, 8:30, 10, 11, 11:30, and 1. So it's going to be very busy. These additional auctions in the afternoon, they are game changers. I can't tell you how many times I've seen a market completely change its behavior in the afternoon after these auctions. So pay particular attention to the clock. Continue to ask the question, if the market was to change its behavior, what am I looking for? And we're not talking about a flag, a cup and handle, a head and shoulders. The pattern is the last thing that you want to focus on. It's everything else that comes before you get to the point where you have a pattern. There's an argument right now, or maybe a debate about what the Fed says they're going to do and what the market is pricing in that the Fed is going to do. Right now, the Fed is saying we're going to continue to raise rates and we're not going to stop until the data shows that we've accomplished our goals. The market seems to think that the Fed is not going to do that, that they're going to blink. And a lot of the top analysts are already starting to say they think that the uh, the Fed will not raise rates as frequently as they said they will. So it's a little off, right? There's a difference right now between what the Fed says they're going to do and what the market is pricing in that the Fed is going to do. So we just got to take it with that, continue to focus on anything that the Fed is going to focus on. And for today, that means jobless claims. It's going to be a big deal, right? It's one of the uh, bullet points or talking points that the Fed focuses on constantly. So today's econ, bright and early, is a place where we have an expectation of some serious volatility. The ADR today is 3.3%, and at the moment, there is no market maker move. If there was, you would see it right here, and there isn't, so you don't see it. I think that's a mistake on Thinkorswim's part to only show it if there's a market maker move for the day. That confuses people, right? They think that they turned it off or that they need to somehow turn it on. When in reality, if there's no market maker move for today, you just won't see a market maker move there. So there is no market maker move on the ES, but as you can see on the NASDAQ, there is. So see how this market maker move just popped up there. So our expectation for the day is the same today as it always is. There are three things that we can do: hold the range, break to the upside, break to the downside. We generally want to start that off with a measurement of just our own expected move. So if you measure from where we closed last night and run this to the upside, 3.3% would get us above yesterday's open, RTH open. So that'd be the target that I would focus on in an upside breakout. Keep in mind when we talk about that, there's a lot of travel that would have to get done. It would not be subtle. Everything would be lit up. And since half the day is already gone, it would need to move quickly, like yesterday. There was no signal that this was slowing down. There was no signal that it was reversing. Everything told you to keep shorting it all day yesterday. It doesn't get much better than that. If we're going to hit this ADR level to the upside today, it'll be the same thing. It'll be very aggressive, incontroversial signals that say we're going here. Tick, trend, UVOL, DVOL, market breadth, AD, advanced decline, everything will be pegged out bullish. You'll have every sector and you'll have the MOT behind you, and it'll all just be pointing to a continuation of an upward move. That's what it would take to get us up there today. And along the way to get there, we would have to get through yesterday's RTH low, the close, our own Globex high. Then we would start to get into some clear sky and work towards 40-40, right? We're going to just call 40-40 as the top end of the ADR. Now, just like I mentioned, most days, moving your ADR, that's not the extreme of the day. That's not how far we could go. That's what a normal move would be. If we go beyond normal and actually start to get a little extreme, then we would be focusing on at least another half of the ADR. So if the ADR is 3%, an unusual move today would be the ES moving, say, 3% plus another 1.5%, 4.5% move on the day. That would be a little unusual. That's how extreme the market is right now. So that's our upside discussion. The downside discussion would be focusing on where we closed and measuring out an ADR of 3% to the downside, which puts us right around 3,800. Now, I did this same move yesterday. I measured it exactly the same way as yesterday and drew the line and said, if we move this far today, that will be our ADR. But that will not be the extreme side. That would just be a normal, everyday, shrug your shoulders move in the market. So if we go to 3,800 today, all we're doing is matching our current ADR. It wouldn't be considered extreme. To get there, we would need to break through our own Globex low, and that is the only institutional pivot point that we have at that level. So we want to go in and take a look at the volume profile. We run a volume profile with a 10-day, 30-minute chart. You can see how really narrow this is, the value area high and the value area low. It's a signal or an indication of compression. If you don't know what these two yellow lines are distinguishing, it's showing you where a one standard deviation of volume is at. And for those who don't speak nerd math, that's saying it's where 70% of all the volume was at in the last 10 days on a 30-minute chart. The red line is where the most volume was at. Simple enough, right? So very close to the COG line. The COG is 4011. The point of control is 4013. So really, really close. If we're discussing that upside breakout, there is a little bit of volume resistance near the value area low. So not only is it the value area low, which would be a pivot point on its own, it's also where there is some reasonable volume resistance. So that upside break that we were talking about has that in the way as well. Now I continue to get questions about what the ADR is. So short and sweet, think about ATR, average true range, and then something like ADR, average daily range. Mine has the days listed next to it. This is a 21-day ADR. So I told the machine, count back 21 days and measure the highest point of that day and the lowest point of that day, and then measure the next day from its highest and its lowest and add those two numbers together. And then do the next day and add that to the numbers, right? Did that 21 times and then divide them all by 21. And that gives us a 21-day average from its highest point to its lowest point. ATR is very similar to that, but ATR has a little bit of weighing math in it. And there's no reason to go nerd on the weight or how weighting is applied, but there's not much difference. So if you are on a platform that does not have ADR, just bring up your ATR, set it to 21 days, and you'll notice that they're going to be kind of close, right? It's not perfect. This ADR says 107. and my ADR says 121. So they're not perfect. It's very likely that my ADR has not counted today's price at all. That mine is just using closing values from previous days, and that this one is already starting to use today's. I say probably. I don't know for sure. It's a good place to start, but that's really close to what the ADR is that I'm using. So don't get hung up on, hey, I don't have this study. What can I do about it? Just use the ATR. It's close enough. The third scenario that we haven't talked about yet is that we could stay range bound. There's two ranges when we talk about being range bound. One is our own Globex, which I just highlighted from 39.33 down to 38.55. That is our current Globex range, and we could stay there all day. But I find it really unlikely that we're going to do that. We're in a high volatility marketplace. Our ADR alone reflects that we are consistently and persistently making really big moves. And I just don't think that we're going to stay in this spot. But we don't want to use language like can't or won't, right? It's unlikely that it will stay in this range. And this is only part of the range. So if this is zone one or part of the lower part of the range, then all of yesterday would be zone two. And if you want to get a little more nuanced, you could use all of the RTH from yesterday, from the cash open all the way to our current Globex low. And then the third zone would encompass all of yesterday to its highest value. And if you'll notice, that's where the lines are for the pivot points. The highest value, the cash open, and the close. So if we were to stay range bound, we could travel through all of this and it would still be considered range. So if we start having some really nice, clean, beautiful trending price today, it will still be trending price within yesterday's price action, within yesterday's range. These zones become benchmarks on the move back up. And what we would eventually end up with is a cup. I don't know if we're going to get a handle or not, but if we were to make that move back to the upside, that's the shape that we get, a cup. Patterns usually fold into another pattern, which folds into another pattern, and so it continues, right? It's the way of things. Absolutely the same discussion with the NASDAQ, except that I'm going to pull back a little bit here, go to a higher time frame for a moment. The white line on the screen is a drawing tool right here, the regression line. I started at the peak, just dragged my mouse across. You don't have to try to set the line where it needs to be. You just tell it where you want to start, on what day or what time, and then just drag your mouse across until you're at the end. All right, so you can see how my mouse is in the lower part of the screen and the line still responds and goes where it's supposed to go. Once you have that line in place, you can see the sine wave high to low, low to high, high to low, low to high. And what we're looking for is an end to this. So we made it through the line from yesterday, like we had talked about, and we now are very close to a double bottom there. Just like we were close to a double bottom there, and we were close to a double bottom there, and there. Each one of those previous double bottoms broke, and we continued the sine wave. What we're looking for right now is to see if this is going to present a higher low and begin this basing before moving the other direction, rolling over and flipping back. There's precedent for that, just like when we got to the top here from the other direction. If we were running it from that direction, you can see how we had a top, the opportunity for a double top, and we didn't get it. We ended up with a lower high, and then we rolled over from that topping pattern and began the wave to the downside. So we're just looking for this in reverse. Simple enough, right? Easy peasy, nothing to it. So just like with the ES, we want to mark out the 3 scenarios, what could happen today. And since there's only 3, it makes it simple. We could stick the range of our own Globex. It's a very muted, compressed range, and I find that very, very unlikely, but we could do that. Still, part of the range would be that we get back inside of yesterday's price action and we stay within the RTH of yesterday. That's still part of the range discussion. So if the NASDAQ is to rally today and get up to 12.3, we would still say it was range bound and that it was a range day because we were inside of yesterday's range. The last part of that range is all of yesterday, from the Globex high to our own Globex low today. So from 12.6 all the way down to 11.7, all of this is today's range. So as you can imagine, it's a really large range. And there's plenty of room to have beautiful, clean price action, beautiful, clean trend, absolutely amazing opportunities. So nobody's telling you don't trade range or to sit out because there's plenty of room to trade this. If we were just to do that much, we would have to get through the RTH low of yesterday, the close of yesterday, our own Globex high, and then we would be in the clear. We wouldn't have any more pivot points. But we want to check the volume profile and make sure that there's no volume resistance in this area. There very likely isn't, but we're going to go there in a moment and look anyways. The ADR on this is 4%. So from the close, we want to ask the question, what would a 4% move look like? 4% would get us to the RTH open of yesterday. So 12,370. If we move that far, it wouldn't be considered unusual or an outsized move. It would just be our ADR. Same thing to the downside. Looking at what we have and asking the question, how far would it go if we were to measure our ADR from here? So from the close, drag it to the downside, measure a 4% move, and you get around 11.4, 11,450 ish, right around in there. Right, so that's our downside ADR. And again, if we moved that far, it wouldn't even be considered extreme. That would just be normal. So looking at the volume profile, again, we want to notice how compressed it is compared to all of the room that it could be showing us. The value area high and low are very close together, and that makes it very compressed. We want to ask the question, where are we at? Are we inside the box or are we outside of the box? And we're outside of it. Once we recognize that we are in or out, we want to ask the next question, are we moving towards the box to come back in? Or are we moving farther away from the box, meaning we're getting even farther away. And in this instance, we're coming back. On a day-to-day basis, when we're at the high, we think that there's really not much to do here except to come to the low. And if we're at the lows, then we have no expectations of doing anything more than going to the highs. So if we do get back inside the box, there's every expectation that we're going to move towards the highs. The point of control is in red. It's showing you where the bulk of all of the volume is at, the greatest amount of volume. And it's not in the middle. This thing doesn't balance itself with the point of control in the middle. It's on the upper end, not by much, but it is more to the upside than the downside. There is some volume resistance over our head around the value area, just like with the ES. So 11.9, right around in there. You've got some volume resistance in that area. Other than that, it stays pretty shallow, and we won't have much for uh, volume resistance in our way. It's often worth noting a 5 by 5. It's what we call mapping the 5 or mapping the 5 by 5. If you put a volume profile on each day and you look for uh, a touch of a point of control from a previous session, we had one marked from this Thursday back here, and we hit it yesterday. It's basically where we stopped yesterday. So that was an untouched point of control that was carried forward. Now we've hit it. We won't carry it forward anymore, right? Yesterday's was already hit last night, so we won't carry that one forward. Generally speaking, we normally carry the previous day's levels, even these value areas. I don't really hold much weight to carrying forward a value area from the previous day, but when you get into indicator logic and the way that it's taught, that's what they say to do, to carry it forward. I'm just sharing that with you. I don't do it personally, but yeah, whatever. So we've got our three scenarios for the day, right? We always have those every single day. Now, it's worth pointing out some of the signals that we use on a day-to-day basis. And what I mean when I said yesterday, there was no reversals. So you didn't have to worry about trying to catch a falling knife, right? You didn't have to worry about trying to run that thing back up. At one point yesterday, we had a reasonably decent pullback. And that was the one and only area where it looked like we could possibly, maybe, have begun a reversal yesterday. Other than that, every signal all day until the end of the day yesterday kept saying go short. The advanced decline, the volume, the U-vol, D-vol, everything, money flow, everything, right? We want to continue to watch the VIX. You want to continue to watch the dollar and the bonds. These are some of the best indicators that you can use on a day-to-day basis. I know they don't look like an indicator, they look like price action. But looking at all these other markets while you're trying to trade through the day is how you get the conviction to take the trades that you're taking through the day. You don't want to sit and stare at your Facebook chart or your Nvidia chart or whatever it is that you're trading without looking at all the other markets that are moving around it, right? Because everything's connected. So we want to look for any signals that can help us out with that. If the S&P is sitting at a resistance level and we're wondering if it's going to break through that and advance to the upside, look at where the bonds are at. Are they also at a resistance level, or are they at a support level? If the bonds are at support and fail support and drop to the downside, you're very likely going to see the S&P break its resistance and go to the upside. It's not guaranteed. It's not a teeter-totter. But when one of these are moving up, very often the other one is moving down. The VIX finally woke up. A little bit of surprise there. Finally, glad to see, a little late, better than nothing. But it is starting to wake up a little bit. When we talk about the VIX, it does help to recognize which VIX you're talking about and what it is that you're looking for. So you can see the Russell volatility, the NASDAQ volatility, VIX futures, the VIX 9-day, the regular VIX, the 3-month, and the 6-month. One of the first things you want to do when you're looking at the separate VIXs is check their price, because there is a thing called backwardation, and that's when we leave contango. I know those are big, funny, fancy words, but things that you can connect with time and price generally have a curve that looks a lot like this. Things in the front are usually very cheap, and then the farther out in time you go, they get more expensive because there's so many unknowns in the future. Things in the future are generally always more expensive. When they're not, and this curve gets inverted and we start to see things going the other direction, then we're no longer in contango, we're in backwardation. And this affects options trades drastically. So it's really important to pay attention to. It affects all kinds of things like skew, options model pricing. Are you getting a fair price? Are you selling it for an accurate value, right? Are you paying a fair premium for it? All of that is a part of the discussion of recognizing how VIX impacts us. And that's just a fraction of it. The 20 videos that I did on the VIX, and I still didn't cover it all. So look at the price. The 6-month is 33.64. The 3-month is 32.80. We're not in backwardation there, right? We're in contango. The regular VIX, which is 30 days, is cheaper than the 3-month. So again, no confusion. We're still in contango. And then the 9-day. The 9-day is more expensive than the 3-month. So we have a slight backwardation there. These are the VIX futures. And generally speaking, this is a better way to go than looking at all of those different ETFs. They're in order by their date. So this lower right one is next year, January of 2023. And if you look at the prices, $29.65 for next year and $31.80 for our right now VIX. So the curve is going down. That's backwardation. So we are in backwardation. We haven't seen this for a while. This is the ES futures. And yes, there is backwardation in contango in the futures. Time connected to something with a price. So we're looking at July on the left and November of 2024 on the right. What we've been seeing for quite a lot lately is the opposite of this, that the institutions and the firms are trading forward using the higher contract values, and they were to the downside, lower than our current location. Going back to the VIX futures, without having to look at all of those different contracts, you can just put in the VIX futures here, and you can clearly see we're in backwardation. So with all the econ we got on deck today, guys, technical analysis, finding a flag or a cup and handle or a rising wedge or anything else like that is going to come second to whatever econ comes out. So with that in mind, when we come into the open and you're thinking of what you're going to trade today, we've been in such a highly correlated market state that 90 to 95 names in the S&P are all doing the same thing. So like yesterday, for an example, when we went into the close, there were only 2 names in the S&P that were up. And it was an expansion day. It was a travel day. We moved somewhere. We went somewhere in price. Until we actually break out of the range, and we're talking about range 1, the Globex, any attempt to trade today in anything, if this stalls, the other things are going to stall. All right. So if you were trying to trade long the other day, say on Tuesday, if this hit its head on resistance and failed to break through, then whatever you was trading likely did the same thing. So your pattern is always the last thing to focus on, not the intraday pattern that says, oh, a head and shoulders, a cup and handle, a flag, whatever. It's where are we on the day? What econ is coming out next? How is that going to affect the rest of the day? Where are we? And break that trading down into zones from 9:30 to 11, 11 to 1, and then the end of the day. Speaking of the end of the day, they petitioned to remove lock limits. That removal happens at 3:35 in the afternoon right now. So as we get into the end of the day, they remove the safety net right now, and there is no lock limits in the futures past 3:30 and into the close. This isn't the first time in history they did that. When we were coming up out of the COVID lows back in March of 20, they removed the lock limit restrictions so that they could buy back in aggressively using MOC orders, market on close. And we were getting those big, massive rallies in the last 20, 30 minutes of the day because there was no lock limits to stop that market from running. And all the institutions that had closed out a lot of their stuff was piling back into those contracts again. So they petitioned to remove lock limits. They got it approved. Lock limits are removed at 3:35 in the afternoon. When that is finally ended, I'll let you guys know, but that's just the way it is right now. So be very cautious when we go into the afternoons, not just today, but every day for the immediate future. Because if this was to get nasty, yesterday wasn't even nasty. It wasn't bad at all. We're well within our expected move boundaries. This hasn't gone too far too fast. And this was not extreme. If it gets to be extreme, the worst of it is likely to happen past 3:35 because there won't be any lock limits to stop the market. All right, so we want to look at the sectors this morning. One of the first things we want to try to recognize is there any divergence going on out there? We're still down from last night, right? The NASDAQ is down 1%. So what sectors are down and what sectors are up? What's running opposite of the market? There's been a pretty fair capital rotation lately. Generally speaking, we've had the days like yesterday when we're down and we can go look around and say, what didn't go down or what went down the least? With the capital rotation that we've been seeing, anything that was up on days the SPY was down will be down on days the SPY goes up. And we've been using the rallies in SPY to look for new opportunities to go short, sell the rip instead of buying the dip, right? So then on our moves down, we're closing out all of those swings, or at least locking in some profit on those swings and looking for the next opportunity, another bump to the upside to reload and get more trades to take it to the downside again. I'm not one to short from the hole, right? I want to short from the highs. So until we get another pullback, I'm not really interested in taking a lot of swing trades. Unless I can find some stuff that had a generally decent pullback this week. So looking at the sectors, we've got the devil's metal, which is silver. That's up this morning. Bitcoin is up 1%. Bonds, emerging markets are basically flat. Remember, we use emerging markets to gauge global participation, right? If the global markets are risk on this morning, then this would be bid up a lot more than it is. My benchmark is at least 0.5%, and that's up or down. So when we're looking at what's down this morning, there's quite a bit of sectors in here that haven't even moved 0.5%. But you want to be very careful when you're doing this kind of analysis to make sure that the change percent is not reading something from the after hours last night. Because most of these platforms like this will show you a change percent, but it won't tell you, hey, this is from after hours yesterday, or hey, this is from this morning's pre-market. It'll just say this is from outside of regular trading hours. So things like cloud, for an example, there was one print in cloud way down here. And what we would want to be looking for is, was that print an after hours print from last night, something like 6 o'clock or 5:30, something like that? Or was it one in the pre-market? And notice there wasn't a lot of trading. It was just one print. As opposed to something like the Qs, which has had a lot of trading in the overnight hours. And there was stuff from last night and from this morning. And so we know that the Qs is probably really accurate. And there's something like cloud is not. That one little print doesn't tell us much of nothing. If we're going to see a rally in the NASDAQ and the S&P today, we need at least two of the three risk-on sectors, XLF, XLK, XLY, preferably tech or finance, to see a rally today. If you don't see those sectors going to the upside, there won't be a rally in the S&P and the NASDAQ. Technically speaking, I'm not supposed to say it that way, so let's say it differently. If you don't have a rally in finance or tech, then it's highly unlikely you're going to see a rally in the NASDAQ or the ES. That's a more appropriate way to say it. But there is also just the MOT, the monsters of tech. Keep track of them as if they were an indicator all of their own, because they are. And they're a very accurate one. So without the monsters of tech, it's very unlikely that you'll see a rally in the S&P or the NASDAQ today. Don't make the mistake that I've seen a lot of people mention lately. Well, you've gone so far to the downside. Surely we're going to go up today. That's fallacy, right? That's false thinking. The market does not have to go up today any more than it had to go up yesterday. It's unlikely that we're going to continue to move in one direction day after day after day after day. And the more days in a row that we move in one direction, the more likely it is that we're going to reverse and go back the other direction. But it doesn't owe us a reversal, especially since yesterday was still within boundaries. It may have felt extreme, but we're still within the boundaries that we were supposed to move for the week. We're still within the expected move. on a lot of markets. So we want to take a look at the sectors that are not represented by the S&P legacy sectors, right? The top 11 sectors of the S&P. So to do that, we kind of make our own sectors, like the crypto. This watch list is built on the crypto futures from the Smalls Exchange. So I just went in there, opened it up, and said, what makes up the futures Smalls Exchange? What is the weights within it? And these are the names that was in there. So I didn't just randomly go pick, blockchain names or crypto names. I got it out of the crypto futures. And you can see it's kind of a mixed bag. About half of them are red and about half of them are green. There's nuance to this, though. If you dig a little deeper and start asking, well, which ones are red and which ones are green, you'll notice that most of the ones that are green are actual coin or a representation of coin by some form of an ETF. Whereas the ones that are red are the ones more heavily vested in blockchain, not actually owning any coin or not a coin. So names like Taiwan Semiconductors, AMD, Nvidia, Square, they're in this list. They're the ones that are down. Or the electric vehicle markets. We don't have an S&P legacy sector for electric vehicles the way that we do for transportation or utilities and energy, finance. So we make our own. There's precedent for this, for making your own watch list and focusing on it as if it was its own sector. So in the EV market, you'll notice the names that are down this morning are a lot of those legacy names. Ford and GM, for an example, and then some of the newer names. New compared to things that have been around 100 years, right? Tesla, NIO, Ride, Li Auto. So Li and XPEV and XOS, those are in the green. A little bit of a rebound. But names like NIO, Ford, and GM, they're still in the negative. So it's some divergence in there, which may provide an opportunity. My day trades continue to be more energy and finance than anything else. But that doesn't mean that we can't find opportunity somewhere. The pot stocks are down, except for things like the pot stock real estate, XXII. But again, look at where the prints are at. They're from after hours last night. They're not, well, there we go. Just about to say they're not showing liquidity, but hey, it woke up. And then, as usual, there are always names somewhere that are going to the upside. So if you're using a small account and you're not trading options, or you just want to trade stock and go long because you don't want to borrow against stocks to go short, you're on the hunt for, smaller, cheaper companies, reasonably priced, that you can trade. There's always names to the upside. These two watch lists down at the bottom are my watch list for things that have options. But just because they have options don't mean that you can't also trade the stock instead. And there's quite a bit of names down in there worth focusing on. So there are opportunities out there for that as well. As we come into the open, you're going to want to revisit all this because we'll have had a significant amount of econ by that point. and we'll have a much better idea of what to focus on as we get into the open, right? The indicator class yesterday went really good. I don't think we're going to be done with those anytime soon. So the idea right now is that every Wednesday, sometime around noon, hopefully at the same time every Wednesday, we'll come in and have a live stream, and we'll continue with the indicator requests as they continue to come in. A discussion just like what we did yesterday. Who made it? Where can I find more material on it? What's the normal signals off of it? What are they based on? I'm not much for using indicators other than for analysis, but knowing that a lot of people do use them, it's worth, to me, it's worth helping you guys out, going through and getting you set up in a way that you can use those indicators more effectively. I thought it went pretty good yesterday. So if you guys got requests, just throw them out there. I'll keep track, put it on the list, and we'll continue to cover it. I didn't get the video loaded for the replay, but I will get it loaded this morning, and you'll be able to find that replay by searching YouTube for the Bullish Bears. It'll be named something with indicators. I'll let you guys know in the chat when I get that. Other than that, everybody, be careful, be safe, have a good one. I'll see y'all tomorrow.